Good morning, everybody. Welcome to the Flow Show. Thursday, 21st of November, and a snowy day here in England. I came and got snow. I've got snow now, so a bit unusual to get snow this far south in the UK, but it's currently settling. So a bit of a cold one for us here. Hope you're doing well. How's that bunny doing, Kay? You got it in your oven yet?
I don't know yet. Didn't manage to catch it. Merry 21st of November, everybody. Morning, Ryan. I don't know. I'm not even sure it's a rabbit. It looks like one, doesn't it?
Yeah.
Oh, by the way, for those who are not in our chat room, you should be, because we are posting pictures of funny stuff and footprints and that are going through our garden. So, yeah, there you go. Okay, is this a rabbit? Question mark. Anyway, yes.
A rabbit or a very wonky cat.
Yeah, snowy southwest England this morning.
Yeah, and I love it. I do like a bit of snow. I'm like a little kid with snow. I really, I've never stopped loving snow. I'll be out in it later doing snow angels and all sorts of crap if it gets thicker, and take the kids out later. Anyway, right, let's get into real business and what's going on. We'll kick off as always in China. The China Ministry of Commerce has announced it's going to increase financing support for foreign firms. So they're trying to get more people tempted back into China. There was I think it was a Goldie's report early this week, yesterday or something, saying that foreign investors, or they see that foreign investors are still not willing to invest in China yet, and that's a big part of the big piece of the jigsaw gone on over there. As far as the fixing rate goes, 719.34 from 719.35 yesterday, so still keeping the foot on the brakes there. We've had Ueda talking again. He says as soon as the new US administration announces its set of policies, we would like to incorporate them into our economic outlook. He says we decide monetary policy meeting by meeting on the basis of information that becomes available up to that meeting. There's still a month to go until the next meeting. There will be more information available by then. We do seriously take into account exchange rate movements when we form our economic and inflation outlook, including the question of what's causing the exchange rate changes that are taking place at the moment. So a lot of round the houses comments there, trying to cover all bases, and a good bit of trying to sit on the fence. I think, Kay, deck's still open, but they may be pausing because of Trump, or they may not. And as far as FX goes, FX is moving more on the back of the dollar and Trump and risk than anything going on in Japan. What do you make of that lot?
Yeah, in Japan, what I do find interesting is that MOF should be the one that handles FX, but Ueda is more and more implicated in, I'm not going to say the management of FX, but the effects that FX has on monetary policy, which is roughly the same in many different words. So I find it interesting. It's been going on for what? Okay, yeah, it's of course come to the fore when dollar yen was up at 160, but it's a market difference between Ueda and his predecessor Kuroda, right? And I find it relatively interesting. Of course, now dollar yen is let's call it a bit, a percent from the highs, due to risk off as well. But I do find it interesting that Ueda incorporates FX in the way he does into whatever monetary policy may be doing. So I think it's clearly a case that he wants to leave December on the table. That is my take about it. Even though he hides behind what's happening in Trumpland, of course. And the Chinese is about I think is about the same, right? They're injecting whatever they can into the economy, but now a bit the same as everybody else, I would say. They're trying to see what the real effects and the real decisions are going to be, especially about from Trump's team, because you can scream and shout a lot, but what are going to be the real decisions that have been taken now? We have to say that the whole government that he's trying to put in place is an extremely hawkish one.
Yeah, very much so, very much so. But I suppose we have to wait till about a week, 10 days before the meeting before we start getting the sources pieces out as usual to see what they're up to. But until then, we'll just continue to watch the data. Over at the RBA, Westpac have pushed back their thoughts for seeing RBA cuts. They now see them starting in May versus their previous forecast of February. And if memory serves, they didn't make that February call too long ago. But they've still got this divergence going on with the Antipodeans between what's going on in the RBA and the RBNZ. That's seen Aussie Kiwi lifted up, but I'll show that in a bit. Over in the UK, bit of data and not good news for the new government, which has showed a steep hike in borrowing, up to 17.35 billion, which is not good news. Just after a budget where they've raised taxes to fill a borrowing black hole. So the black hole, it looks far from being filled at the moment. That's apparently the highest October since, I don't know, 1269 or something silly like that. There is a definite souring of mood in the UK in terms of the public and their confidence in the government. It's not yet spreading wholesale to investors, but if this mood continues to sour, it's not going to be long, I don't think, before investors perhaps start to make some real moves in terms of de-investing from the UK. But something to watch in the meantime. Not that the pound moved much over that data anyway. There's bigger things going on, but that's just something to keep an eye on. BOE's Ramsden said they would consider, or he would consider, a less gradual approach to reducing the rate if uncertainties diminish. So he's thinking potentially about picking up on rate cuts if all these uncertainties fall by the wayside. He says he sees evidence pointing more clearly to further disinflationary pressures. He says the October CPI data was only marginally above the BOE's forecast. Over at the ECB, De Guindos said restriction to be eased in the coming months. Stornoas was up again. He says he sees inflation converging to the 2% target by the start of 2025 and repeats his worries again that the ECB may increasingly need to avoid an inflation undershoot. He also brushed off yesterday's wage data, saying the jump in that Q3 number was a blip. We shall see. ECB's Villeroy, the balance of risks on growth and inflation is shifting to the downside. The Bundesbank, cheery as ever at the moment. They come out with a report saying that a significant number of German corporate insolvencies are likely in 2025. He says they said corporate default risk is to remain elevated. What's not good news for Germany, or further bad news for Germany, Ford is apparently going to cut 4,000 jobs in the EU by the end of 2027. Okay, that's over the course of a couple of years, but still not good news. Cuts will primarily impact Germany. That will get the Bundesbank a bit more bearish, and UK operations. The Germany Ford executive said that labour costs have risen 31% over the last 10 years in Germany, and that puts us at a disadvantage to rivals that get state aid. Nothing like having a moan up and blaming other people. Coming back to the US, we had the MBA numbers yesterday, the housing mortgage numbers, 30-year rate up to 6.9% from 6.86%, so still a tightening in financial conditions going on in the mortgage market. Fed heads out in force as well. Fed Cook said it would be appropriate to continue lowering rates towards neutral if the labour market and inflation evolve as expected. Fed's Bowman, one of the big hawks, said should pursue a cautious approach to monetary policy. We may be closer to neutral than policymakers currently think. Says inflation is still a concern and that the progress in lowering inflation appears to have stalled. Fed Collins said some additional rate cuts are needed as policy is still restrictive. Then went around the houses, covering all bases. Says doesn't want to cut rates too quickly, but overly slow rate cuts could hurt the labour market, and the final destination of rates is unclear. Kay, we had a bit of a soggy 20-year auction yesterday. Dump one for domestic demand. International demand was higher, but running below averages. Much to take from that one?
No, I would not right now, because I guess there's a lot. Well, there's always going to be a lot of speculation and stuff. But as I said yesterday, we are slowly getting into the year end, and I'm not so sure that we need to read too much unless you get all the auctions failing or all the auctions doing well. But it's more, I think, still silliness of auctions now could be attributed to the Trump election, and the expectations for higher yields. I'm not going to read too much in it myself. Just in the short term, it's a bit unsure. If everything would be like smooth sailing and like normal times, not a lot special going on, then it could be one to really monitor. But I think right now it's a bit of a difficult one to start make any decision on the back of it.
Yeah, very much, very much. Right, last couple of headlines. Mr. Trump, his team is apparently going to consider creating its first ever crypto role for the White House. That's another boom for cryptocurrencies there. They're going to have someone directly looking at cryptos. The latest Russian-Ukraine stuff is going on. Everyone's lobbying bits and pieces at everyone else. There's headlines, there's misinformation, there's denials and whatnot. So we're in the midst of that still at the moment. But probably one of the more risk-offish comments was from a Russian foreign ministry spokesman or spokeswoman, saying that there's a US missile base in Poland that has long been a priority target that can be hit with new Russian weapons. And this would lead to an increase of the overall level of nuclear danger. We've been discussing this a bit more in the chat room as well, obviously. Market is in small part pinging around when some of these risk headlines. What we have is this step up in escalation. We've been talking about it for the last few weeks. At the moment, I think my own personal view is that we're just seeing bigger missiles being lobbed at each other. And really, the next step up from that is danger levels of talking about nukes. But that could actually mean if we get to that sort of point, that causes the grounds for actual real talks to start happening when we get to that sort of levels. Yeah, Derej, that's what was said overnight, but that's been downgraded apparently from an ICBM to just a normal ballistic missile. Not that it makes any difference, but the wires are all over these missile launches from one side to the other. So a lot of headlines pinging around. And we're probably going to see a bit more on that. What's your thoughts on this Russian stuff, Kay? Is it are we heading to World War III, or do we go to the brink and that's when real talks happen?
Well, I wouldn't call it anything. It's just an absolute disaster. But I think it's dangerous. But I hope you're right. I hope you're any talks about going as far as nukes are going to spark finally people sitting for real around the table. But well, let's see what His Royal Orangeness does about it, because he said that would stop the war in Ukraine in a day. So let's see when he gets into office. But before that, yeah, I'm just I don't know, mate. I mean, it's just it can go any way. Could there be like a very small, like a minor action instead of like going with the big stuff? It's all possible. I don't know. It's just something that um, we just as we see now, it's an escalation. There is no other word for it, right? It is an escalation, whether the ICBM has been used or not. The threat of it is not really good. So. Yeah, Mike, same old, same old. And I don't think it's like really same old, same old, but yeah, let's just hope it doesn't go to the point of no return. That's what I'm looking at. But for us traders, I really, if you look at it from a market perspective, it does look that every step up is now having an effect. You know, we've seen the yen move, we've seen Europe, the euro come down. Okay, euro is struggling with other stuff as well, but it's also the closer to my bed facts that are sending the euro down versus the dollar. The dollar is a bit of a risk safe haven right now, together with Swiss franc and the yen, and finally gold as well. So yeah, the market is reacting to the situation over there.
Yeah, most definitely, most definitely. I'm getting a bit worried about euro dollar at the moment. It's looking very weak. I'm just got my wider chart, my less noisy chart for this one. You know, we know that bounces have been limited into this 106 area. We've had another test close to 105 yesterday, a weak bounce off of that. This is one thing you got to learn with big levels, okay? You got to treat them appropriately. So, you know, if it's a big level that's going to give you good pips on a bounce, it potentially also means it's going to give you good pips if it breaks. Now, we did have a test last time that got under there. That just looked a bit of an extension stop run move there. We may get similar this time if we get a break, but I don't know. I'm set up now. I'm still long off the 105, but I'm set up now with some sell stops. So if we go through the level 104, 85, 80, then I'm going to flip short and see what it does from that side, because it could mean we are going to see a bit of downside if that level breaks. I mean, you all saw how solid the 112 was, and look where that got us. So, you know, when these levels hold, when these levels breaks, it could lead to a decent move. So you got to treat these levels with the respect they deserve. But that's my feeling for that one at the moment. That maybe we're heading for a bit of trouble. Aussie Kiwi, as mentioned, we've broken up now through this double top that we had October, November, just shy of the 111, trying to hold up above it at the moment. This one, again, you've got the RBA who's being stubborn with their monetary policy, and the RBNZ downgrading forecasts, weaker fundamentals, heading perhaps to another 50 at their meeting next week. It's been a weak link for a while, and it remains the weak link, the Kiwi, as you can probably see in other pairs as well. So there's a possibility that we might be walking a bit higher in this one. I've added to my short up in here, and I'm keeping it fairly small, but I'll have another look up towards these highs and up towards this level up there is the next area I'll be looking to add to it. Again, just for a wide view, we've been in this range for quite some time, and I don't see any reason why it should break just yet, but you never say never with anything in trading. But But yeah, I'm just going to be playing the upside in this one, trying to catch a turn for the RBA if one comes. But yeah, I'm not going big on this one at the moment, but I'll be happy to add further up against the levels.
Brian,
Yeah, go on, mate.
yeah, while you're on the Aussie Kiwi and the Aussie in particular, I was looking at it, but obviously Aussie Kiwi is higher, but there is this difference between reactions that we saw in the Australian dollar and the Kiwi dollar post-elections while I was off. Is there anything that you can see to attribute this move to? Because usually risk is when it's risk off or risk on, they both kind of go the same direction. But I see a market difference between the Aussie, which in my opinion is holding relatively well, all things considering, and the Kiwi performance.
Yeah, well, the Aussie dollar's been buoyed up a bit more on the China stuff. Obviously, China's looking a bit funky at the moment, but there's been a couple of green shoot type numbers out from there, which obviously is a bit of a bonus for the Aussie dollar. So if you split it between them, Aussie dollar, we've got the RBA has said they're being stubborn with their monetary policy, not looking to shift at all. Meanwhile, China's potentially going to improve, so that's lifted the Aussie as well. On the other side, you've got the Kiwi has said looking a bit weaker fundamentally, heading towards another 50. So that's the divergent side on that, and not as tied in with China. Yeah, that's really the difference between the two that I can see anyway. So yeah, fundamentals a bit better in one, a bit worse in the other.
Yeah, okay. Alrighty.
Cool. Good stuff. Right. So anyway, yeah, there's the Aussie. Might as well, no, there's the Kiwi. Sorry. So you might as well stay on that one. A bit like euro dollar, not bouncing too far from its big support level down here, and we're getting back towards there now. So we could be on for a few breaks around the grounds. Aussie, as Kay mentioned, doing a bit better up there, turning around this 65 10-ish area. Holds there, maybe gives it a bit more impetus to have another run a bit higher. Spoke about these levels when we were pinging around these areas. So these are all, though, they're still all small steps in the bigger picture. In this trend, these are all little minor steps. I haven't even started putting the fibs on here yet because we're not even looking like getting close to that. Dollar CAD, I don't know what to do with this one. I was tempted yesterday and I missed it, and we got a decent rally. Now we're back here pretty quickly. I don't know whether to have another go here or not. I probably will do, and it'll probably be the wrong move and I'll lose money. But yeah, a bit of FOMO. So we're having another test of this zone here. This is really a bit of a pivot level now. If we break under here, we're probably going to go back to 139 fairly quickly, and then maybe even down under to see what this level's made of again. It was a level, it's an old level. We had a bit of prior action around it. Then we had these couple of breaks, election, Fed and whatnot, then got back above. So if we get another move down here, we'll see what a test of that holds. And down there, we've also got 38.2 fib of this whole move that we had since late September. So that will be a first test of the overall trend. But we're still some way off of that level for now. But yeah, I don't know. I don't know whether to play a long off here or not, but I'll keep an eye on it for this one. Kate, I'm going to ping it over to you, mate,
Yep.
for a couple. All yours.
Well, first of all, the usual one, gold is finally made it through the resistance box here. And also, I just realized on the daily that the 55 DMA was just above there as well. So we are through. I'm not saying that 55 DMA is one to really, or one that really holds or has big importance, but it has at times showed up. But I really think it's rather the box here that finally gave way, that prior low. And if we zoom in a little bit, we can now see that we are through this 50% here as well, or trying at least to get through the 50% of the move lower that we saw unfold just prior to and post elections. And this is looking a bit better. Obviously, it's not only dollar, it's not only yields that we see impacting it, it's also a better store of value than some other stuff. Gold, when it's when risk is not behaving well, gold tends to be a store of value where the people are refusing it. The interesting thing, though, that we had is that we had finally, as you can see here, finally a bit of continuation in Asia. And that I think is the interesting bit. You know that I always look at what Asia is doing. So now from now on, how also I'm going to go back to closely monitor what Asia is trying to do with gold, whether we have followed through or not. Obviously, the Russian situation also is pushing this higher. But let's see what the Asians are doing with it. And contrary to it, silver is lagging, is really lagging. It is not such a risk play. And if you're looking at several various indicators, like for instance, copper is lower today as well. It could be a bit of a laggard, and because we need smoother and better economic data for silver to push through. So as I was saying in our room, I bought it when it after it did the low of the box, and I just I just started today to lob out parts of what I bought here. I still have my first entry, re-entry that I had from about here-ish, something like that. But it's still an extremely long-term position, which I want to continue to work on. But for the time being, I'd say a bit cautious because it could really be lagging what's happening in gold. And any setback that we would see in gold may have an effect on silver as well to bring it down closer to that support zone. So that's something that we need to monitor. The other one that we should keep an eye on today. So first of all, we do have the SARB. That is the mix. We do have the SARB today, South African Reserve Bank, and so South Africa is also, well, the dollar is higher on one thing, but they are expected to cut 25 BPs to 7.75% this morning. Keep just an eye on what's happening around 18. Okay, I think it's important enough, psychological enough to see what's happening around 18. If they cut and are dovish, I wouldn't be surprised if we get back to retest this 18.37.47 zone at some stage. If in turn they are not worried about much, we may see a retest of that support here into the 1790s. And obviously want to keep an eye on today because Swiss is really the currency that even when the yen wasn't responding to risk, Swiss has responded to risk, and we have broken the bit of intermediate support here, and we are back below the September low. We are back into the 92s. Okay, depending on the situation in Ukraine and on other war scenes in around the globe, Middle East and stuff, I thought that S&P may try to be on the bid around 93, but I think they're not stupid. They know what the market is doing, so this could be heading back down to low 92s. Okay, so and again, I would like to reiterate the way that S&P is working. People in our chat room know because I've updated this morning as well, is that they usually, if they choose to intervene in one of the pairs, and I would say today, looking at the moves, the comparable moves between the euro and the dollar Swiss, I think if ever they would choose to come and sit on the bid in euro Swiss, looking at the way they diversify their FX reserves, I would be a tad careful on the euro dollar, because it could actually weigh on the euro dollar. If they buy euro Swiss, they will how should I say, rebalance a part of their those purchases into dollar Swiss, so it may weigh via the transactions on the euro dollar a little bit. That is mostly what I wanted to show. Let me see. 26.85 will be the next level in gold. I have around 26.93, but 26.85 was the high here. A bit of a traffic around there as well on the way down. I think it was a bit of a level from on the way up, and then coming back down, that 85, 80, 85. Yeah, it could be that 85 shows up. I'm
70. I've got 70, 85.
You got 85?
Yeah, 70 right here and now, and then 85.
And what
So
was
bit
that?
of a zone.
Was it from here, perhaps?
Yeah, you wanted to go in a bit. Yeah, it's just
Yeah,
off the top
yeah,
of those
yeah.
prior highs. So back in early October,
Oh,
we came up.
the
You might want
short
to go into something
short
like an
term then.
hourly or something.
The short term then.
Yeah.
Okay, so where is that, Ryan?
So see back the 24th of September.
24th
Right there. No, back. Yeah, up there. So no, the one before, the high before that one.
This one.
No. Back up to that other one.
Sorry,
That's all
24th
right.
September.
Yeah. So up a bit. That high. Yep.
This
No,
one.
down. One to the left. There we go. So stick a line in there.
Oh, okay. That's 70, and that's
And
the
then
85. Yeah,
85.
all right, okay.
Yeah.
Yep, got it. Okay,
There we go. Got there
all
in the
right.
end.
Thanks. Cheers, mate. Yeah, thanks for yeah. I still need to update some of my charts as well. Okay, yep, okay. Yeah, and it's here as well. We have a little bit of traffic around here as well. Yeah,
Yeah.
I think we are going to run probably, unless there is this escalation. I mean, guys, I really hope it not happening, but if ever, the worst would come to happen, expect gold to perhaps open around the all-time highs. And that is what I think. We could do 100, $200 in no time. Okay. So if you're planning to counter trade stuff, make sure that you got stops in place as well, because if really something really bad happens on the international scene, on the geopolitical scene, this could really just fly through. And just one thing on the dollar yen. Yesterday I was saying, like, medium term, longer term, it's actually still looking bullish to me. But we have to take into account all those comments from Ueda, and now it seems that geopolitics are again impacting what is happening on the end. So be a bit careful if ever we're starting to tackle, or we're starting to really test 153, 40, 65. That is a bit my zone here. If we start to get below, we could have a very quick move down to 152 again. Okay, so this is one that I'm keeping a close eye on. I think we have seen all those setbacks in the past. Yeah, we have seen all those setbacks in the past. Overall, this is not, to me, it is not a bearish, outright bearish picture, but with everything that's going on one side, the dollar, the next, the geopolitics, and rates and stuff, we have to be mindful that anything can happen right now. So keep a very close eye on 153, 40, 65. That is one that I am keeping at least a very close eye on, to see what's happening. And with that, Ryan, I'm going to give it back to you, mate.
Thank you very much, mate. Not got much more
The
to
one
add to
thing that I
that.
would like
Yep.
to add is that yeah, I'm with you on the euro dollar. It's I'm starting to find it a bit risky to catch a knife. I wouldn't be surprised that before the weekends we are going to go below those prior lows there. That's just a bit of a feeling that I have, especially that we are banging our head against that 106 figure 10. And it's not only due to wars or due to Trump or whatever, but just also the price action is not really healthy for the euro, in my opinion.
Yeah, very much so. I agree with that as well. And also the economy's not doing all that still. So yeah, if it wasn't for the fact this is a big level down here, I wouldn't be long the euro. I can tell you that. But as we like to say, levels are level until they're not. As always, keep an eye on what's going on in yields. We're still not too far away from this 4.5 level, so we're still in the running. But this is one that's moving. Yields moving low on the back of those risk headlines when we get them. So if that all gets removed, that could be a time when we see a return back to that 4.5 level, maybe even higher. And one thing I will say, if we do get a de-escalation in Russia, whether it's now, whether it's Trump in a couple of months' time or whatever, you will need to be prepared, because we're probably going to see one hell of a risk rally if that happens.
Yeah, absolutely.
So, as bad as things seem now, if we do get an improvement, you need to be careful, because markets will rip on the back of that. If it happens, let's hope it happens sooner rather than later. Until then,
we see what the impact will be, because we've seen the other side, right?
Exactly.
Gold will probably drop like a stone. Dollar yen will probably be 158 before you can blink an eye, and things like that.
Yeah, very much so. So always be prepared. Anyway, stay safe, stay warm, stay unsnowy, and we will see you all tomorrow. Thanks as always, Kate. Catch you later.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.